Joining us now is Rebecca Patterson. She is the global head of foreign exchange at JPMorgan Private Bank. Rebecca, always glad to see you. The Yuan has gone up 2% so far this year. Chuck Schumer, some others in his camp wanted to go up 20%. Most people say that's not likely, but where is the Chinese yuan likely to go, let's just say in the next 6 months? How much will it appreciate in that time?
Well, I think if we have decent global growth and Chinese growth holds up and markets are okay and the dollar's weakening, the stars align, you're probably going to see the renminbi strengthen by 2-3% over the next 6 months. So it's not going to be very spectacular. That's what China wants.
Right, that's what China wants, and at this point it looks like they have the leverage to do exactly what they want. What about the Japanese yen? We're hearing from a lot of traders, they believe there was a soft intervention overnight. Now, whether or not that's true, it does seem that the finance minister made some comments saying they were really concerned about the yen's strength, and it does seem like even a harder intervention is possible. How does this complicate the dollar-yuan story?
Well, it's been a great conspiracy theory for the last couple weeks because we had China buying Japanese government bonds. Those flows strengthened the yen, which put even more pressure on Japan to have to intervene, buy dollars, buy treasuries, which of course weakens the dollar, and that makes the Chinese renminbi stronger. So there's a bit of a circular thing going on here, which is somewhat confusing, and you could say there's a lot of interesting political things behind the scene. But at the end of the day, I think these are separate stories. Japan needs a weaker yen because it has deflation. Its exporters are getting hit hard. China wants a steady to stronger renminbi because it has some inflation pressure and because it wants to rebalance its economy. The problem is the timing. Chuck Schumer's not going to get 20% quickly. China is going to do what China wants to do, and that is slow and steady.
Slow and steady. Mark Faber was on with us earlier, the editor of the Boom, Gloom, and Doom report, and he was saying, look, all the countries are making this mistake of wanting a weak currency and pursuing a weak currency policy. So with all of this in the bathwater, what is the average investor to do? I mean, what if you want to take a currency position? What's the safest bet right now?
Well, it's funny. All this race to the bottom, if you will, for a lot of the major currencies is one of the factors pushing gold up. And while I hate looking at gold at current levels,
now you're forced to.
Well, fortunately, we've been in there since about $800 an ounce, but I think we're going higher still. But frankly, I think if China does continue to move slow and steady, the place I want to stay focused isn't China. A lot's already priced in. But in the region, I want to keep looking at Indonesia. I want to keep looking at Singapore, India, Korea, because if China slowly strengthens, these currencies are going to follow suit.
Well, your comments are exactly like Mark Faber's. You guys should have lunch next time he's in town.
I don't know if that's good or bad.
What about gold at 800? You say you've been in since then, so that's great, and going higher. Just how high could gold go? And let's keep in mind what the Fed is doing as well.
Well, that's a big reason gold is where it is. Everyone's expecting QE2 to set sail in the United States, and that liquidity weakening the dollar, creating longer-term inflation fears. And so people protecting themselves against longer-term inflation are buying gold. If we do actually get more liquidity from the Fed, I think a lot of it's already priced in already. So I do think gold can go higher, but I'm not in the camp that thinks we're going to $1,600, $1,800, $2,000 an ounce.
And now that everybody hates the dollar, the euro looks pretty good as well. All right.
I'd sell it here.
You would sell it?
I would sell the euro here.
Okay, Rebecca, thanks. Always glad to see you.
Thanks.
Rebecca Patterson joining us there from JPMorgan Private Bank.